All right. Hello, everyone. Welcome to our next episode of Going Live with Good Soil. I think we're on episode 63. Is that right, Matt? I think this is episode
Yeah,
63. And this is a
close is 6
very,
weeks away from the
yeah,
milestone.
yeah. This is a very special episode for anyone watching on YouTube because we are doing this. Not only are we doing this at the same time as Twitter Spaces like we always have, but this time we're doing it with a new initiative on Twitter Spaces for Tesla Tuesday. So on Twitter Spaces, there's these back-to-back live streams or spaces going on pretty much all day long that our friend, very good friend Bradford Ferguson, is coordinating and organizing. And so, yeah, it's really, really cool to be part of this and see what happens from here. Yeah, I mean, I don't want to take credit. I mean, ideas are meaningless without execution, and I think other people have had this idea, and yeah. So, just to go back on that, Matt, you want to test your audio one more time because Alex said on the YouTube live it wasn't coming through. So, Matt, test it out, and Alex will tell us real quick. Sorry. Okay, people, still nothing for Matt on YouTube live. Well, I'll talk for a little bit while Matt looks at this. Yes. Okay.
Test, can you hear me?
Okay. All right. Yeah, that sounds good. And we'll do that. Thanks, Brad, for the suggestion. Matt's audio is all good now on YouTube. So Matt was saying that this Twitter Spaces back to back is my brainchild, a bit of my brainchild, but that's way too. I don't, I think a lot of people had this similar idea. I just voiced it with a platform on Twitter, and I think other people. Bradford's really doing the one executing. Ideas are nothing without execution. There's all kinds of quotes. It's true. I'm too lazy to execute new ideas these days. So I got enough ideas I'm trying to execute. So I'm glad someone's working on this, and it's exciting to see how far this goes. Yeah, and like Bradford said on Twitter Spaces, for those of you on YouTube who couldn't hear Bradford, he just mentioned that at the end, some of the questions on Twitter Spaces we will also address at the Q&A portion of the live stream, and our live stream will be normal for YouTube people, and then we'll cut it off about after an hour and 10 minutes, and then maybe do some live interactive audio questions with the Twitter Spaces folks for the last 20 minutes. Because I think
Yeah,
we're set
and
to have a whole 90-minute segment on Twitter Spaces for today.
for those who are watching this on YouTube, either live or recorded, you can follow this account. It's TSLA underscore 24/7. So that's a great account to follow. There's a lot of spaces going on there. So I'd recommend that as a new kind of resource.
Yeah. And I've already seen a lot of fake Tesla 24/7 handles. So be careful. There's already underscore Tesla underscore 24/7. There's already fake ones. So make sure it's the right one that you follow. So be careful. Anyway, let's kick it off. The format is we touch on macro market. We got a lot of interesting stuff going on there. And then we talk about mostly Tesla, Elon stuff. And then today we have a special episode where we're going to go through a preview of the Good Soil Investment Q3 earnings per share model that Matt works very diligently on, and we've gone over it together a few times, and so excited to share that. So why don't we start with macro? Big news. CPI came in a little bit hotter than expected, and the market really corrected downwards as a result. What's your interpretation, Matt? I mean, macro market is just its own thing, and we all have to pay attention to it, unfortunately.
Yeah, for sure. I think a lot of the kind of bulls out there were really hoping that we'd be turning the corner on inflation. I was kind of thinking there was a reasonable probability that we'd see, like a negative month over month movement in CPI, and instead it was actually a little bit hotter than expectation. So, I mean, it came in at 0.1% month over month, which doesn't sound so much. I think it was, what was it, 8.3 or 8.6, like that, something like that year over year. But from my point
Yeah.
of view, the year over year is kind of less meaningful right now.
Yeah.
So you markets, I mean, you saw right at the 8:30 Eastern posting, the markets just dropped like a rock when that came. So
Yeah.
I think what's really changed is there's essentially 100% chance, I think, now of a 75 basis point hike in September. But I think people are expecting maybe another 75 basis points in November now, instead of kind of tapering, maybe hold, or maybe it's 50 basis points or something like that. So the expectations for a more aggressive Fed, I think, have been raised. So, I mean,
Yeah.
if you look at the chart, one of the things I thought was pretty interesting was, if you look at like the actual chart of the month over month inflation figures, it really doesn't look too bad, because it was like the last 12 months essentially were like these huge kind of spike bars, and in the last 2 months the bars are much lower. I think Gary Black posted that. So it does seem like we're trending in the right direction, but it may not be as quick as maybe we'd been hoping it could be. I don't know. What were your
Yeah.
thoughts, Emmett?
Yeah, I mean, you talk about the charts, and that the month over month is by far so much more important to me in terms of actual data of where we are actually at versus the year over year is almost meaningless to me. Like the month over month is where it's at, and the Fed, they said they're going to base their decisions on data. I think 0.1%, CPI isn't terrible. I mean, I guess expectations were going to, if you look at, speaking of charts, I'm not a technical analysis guy by any means, but you can't ignore the last 2 weeks. The NASDAQ has gone up, 5+% in the last week and a half or something like that. If I look at the monthly chart on the NASDAQ. So, it's been anticipating a CPI print that could be perceived as friendly to interest rates, I guess. And people have been buying. So it's sort of like a mini bubble, temporary mini bubble. That's how I interpret this kind of reaction to the CPI print. This fast 4% drop. We're down 4% on the Nasdaq right now. So on the day, and I think a lot of that is giving back so much of the mini bubble that was created the last week and a half, as I guess people were trying to speculate that maybe the Fed wasn't going to raise rates 75 basis points, and now it's like a guarantee. And
Yeah.
so it was sort of like a buying the rumor, selling the news in a way, because CPI is still very low, I think, but it's not as low. Like I still think, even if CPI was negative 0.1%, I still think the Nasdaq might have dropped 2% just on that, just because it was going to buy the news, sell the rumor event almost,
Yeah, it could be like, it's been such a strange year, really. I mean, where like good news has been bad news, and vice versa.
Yeah.
So
Yeah.
like, I like you just never know. But that's why I think it's kind of more
Yeah.
important now than ever to really focus on fundamentals for companies. And we'll do that in a minute here with Tesla. But it's like, nobody really can predict macro. Like all the experts I've seen, talking about it, like pretty much everybody's getting it wrong in some way or another.
Yeah.
So if you can't win on the big picture, there's things you can do to hedge. But I think the best thing you can do is pick really good companies within that space that are gonna win out in the long run. So
Yeah.
that's what I think is most important right now.
And this is just a really good, this type of macro stuff is a really good reminder of never to believe people who say, "Oh, this stock or that stock, Tesla's going to double this year or something." You just, the macro market determines the medium term and short term movement of stocks in many cases, and that could be a year or less. Like the stock with the best business case beating earnings could still get hammered hard because the whole macro market is tanking like it is now with growth stocks and interest rates being raised and such. So you just, a business and stock, you have to separate the two. Stocks are highly dependent on what the macro markets are doing. So you really want a stable macro market environment, which is not what we're in. And speaking of the whole macro market, one other thing to touch on is the Ukraine-Russia development. It seems to be de-risking to some degree because Russia seems to be losing momentum quickly. I don't know. I don't know how the markets are reacting to it, or if the markets are even reacting to it. To be honest, it's when the Russia invasion first happened, there was certainly a downward reaction in the markets, higher risk. But now that if Russia is losing, I'm not sure the market's going to react inversely and go up because of that, though. What do you think, Matt?
Yeah, I think it could even be a negative in the short term, just because markets hate uncertainty. So, I mean, imagine
Yeah.
something that seems like it's really good news on the surface, where you're like, let's say, Putin is deposed or, steps down or whatever. and the Russian forces retreat, well, you may have a power vacuum, and that could lead to civil unrest
Yeah.
in Russia. And if that could be a situation that's, potentially even worse from a macro perspective, and
Uncertainty. Yep.
uncertainty. Yeah. And of course, like, the most important thing, and we say this all the time, is that, like, the Ukrainians should, like, have the right to their sovereignty, and like, end the killing and the destruction that's going on there. The human toll is way more important than anything with markets. But since this is a kind of conversation around markets, I feel the need to address that. And I think until there's some kind of certainty, or at least a consensus expectation that, something to the effect of, a new regime is going to take charge in Russia and will kind of normalize gas exports, for example. Like, that would be very good news, but we're ways away from there. So
Yeah.
I don't really have any expectations that this is necessarily going to translate to, good news for the markets. But what about
Yeah.
you? How are you thinking
I'm in
about
the
this?
same boat. Yeah. If anything, it's more uncertainty, and like the power vacuum play out. Who knows what happens? Or Putin's backed into a corner, knows he's imminently going to get overthrown, or if he loses the battle. There's lots of things to potentially worry about, uncertainties that the market doesn't like. And so, yeah, I don't think it's necessarily going to, even if best case Ukraine gets its sovereignty, you still have that power vacuum potential in Russia, or Russia getting, disintegrating into multiple territories or something. There's lots of things that could happen. Major nuclear power, obviously, doing stuff like that is always a big risk to the entire world, right? So the market
Mhm.
might panic again and drop 5% suddenly if Russia seems like it's about to break up into little territories or something. Who knows?
Yeah. Well, and how
Yeah.
do you secure the nuclear warheads during a transition of power as significant as that? I mean, that's something the world has never really seen before, right? So,
Yeah. Yeah.
I think there's reasonable cause for uncertainty around the macro, especially around, like, the geopolitical issues. But, certainly, I think it's definitely good news on the whole that, Ukraine appears to be gaining so much momentum, and frankly, just kind of embarrassing, the
Yeah.
Russian army, which a lot of the
Yeah.
experts weren't predicting.
For humanity, it's good news, I think. Yeah,
Yeah.
for sure.
Yeah.
For the markets, I don't know. Yeah. So let's move on to the main event. Everyone, this is Tesla is our big thing. We talk about Tesla mostly. Is there anything else macro CPI related? One thing with the CPI we wanted to dive into, because it's such a big part of Tesla's day-to-day movement, is the macro market, where everyone is seeing, right? So you get a day like today. Then the good news is the Nasdaq is down 4%. And Tesla is only down 3.9%. I'm pretty happy with that. That's like a win to me. When
Mhm.
Tesla is down less than what the Nasdaq is on a big day like that, that's a win for me. So, um, anyway, with the CPI print, one thing I wanted to touch on is uh, some of the owners rent,
Owner's equivalent rent. Yeah.
owner's equivalent rent, the acronym OER, some people call it, but that's a like 40% calculation of the CPI. And Matt, you posted a interview or a video about that the other day. How does that affect the CPI in sort of a delayed way? Can you touch on that real quick so that people understand that maybe the CPI being 0.1%, it's really, it gives a little more color onto that.
Yeah, so I have seen maybe something of a misconception around a lot of people saying, like, oh, the Fed's raising interest rates, and so that, makes mortgages more expensive, and so a lot of people are saying in their specific cities they're seeing home prices fall, and so they're kind of presuming that that translates directly to CPI. But it doesn't, with the way that the calculations are made, and I think with good reason. But I'll just take a minute maybe to walk through that. So there are two components of housing in the CPI calculation. One is just like monthly rents. So they take a survey of renters and say, okay, how much are you paying now, and kind of peg the price change from the previous data point. That's pretty straightforward. But for a homeowner, so you and I own our homes. And so if home prices rise or fall, we don't necessarily feel the impact of that, because we have our price already locked in and our mortgage rates locked in. So there's no change that's really impactful to homeowners. So the Fed saw this. I don't exactly remember when they did this, or it's the BLS, actually, the Bureau of Labor Statistics, I think that runs this calculation, and essentially said, what, this is not good because it doesn't take into account what's actually kind of happening on the front line. So of the housing market. So the way that they chose to address this was to introduce this figure called owner's equivalent rent. And so essentially it's a survey of, okay, Emmett, how much would you say you could rent your house for this month? And then I think it's every 6 months they kind of re-ask that same question. And so you're looking at the change in homeowners kind of estimation of how much they could rent their home for. I think it's a pretty silly system, honestly, because like I have no idea what my house would rent for. Like, so for it to constitute such a huge part of CPI, I think I don't know, maybe it makes sense. I think there's reasons that it makes sense, at least relative to just looking at change in home prices when a lot of people don't feel that impact. But it is not without its flaws. And I think the biggest thing relevant to today's market is just that with that methodology, kind of the run up that we saw in home prices over the last, many years, I think those changes are still kind of making their way through the owner's equivalent rent calculation. And so if home prices do start coming down now, like a lot of people suspect, but the point is, it just may take several months or even longer for the owner equivalent rent, kind of component of that calculation to come down. So this could be a factor that's kind of elevating the CPI print for longer than some people might have otherwise expected.
Yeah. No, great explanation. I hope it makes sense to others. It makes sense to me. It's just the CPI number, when you really study, I guess, what goes into it, there's all kinds of interesting nuances like that. And that's like 40%, 30 or 40% of the makeup the CPI, which is, important to sort of have an understanding of to some degree. So anyway, let's move on to Tesla. Maybe future CPI prints are going to be, not as bad because of the deflation going on in renting apartments right now. Home prices, everything's coming down, but it takes several quarters for it to catch up, I guess. But moving on to Tesla, let's talk about the full self-driving 10.69.2 rollout, right? That just came out. I drove it a bunch yesterday. I got it overnight on Sunday night. And, this is the latest FSD beta version. Rolled out to, I think, all 100,000 beta testers. I know Robert Scoble, I was listening to him. He was talking a lot about it. And I think Warren and some of the other Twitter spaces that were live earlier on Tesla Tuesday were talking about it too. And Matt, you were testing 10.69.1, for the last week or so anyway. But yesterday was my first driving, and I drove 10.69.2 excited, and I got out and took my kids to school, rush hour, lots of cars. And coming out of my neighborhood, there's like a miniature Chuck Cook style left turn you got to make. It's like a baby version of what he has to go through, right? But during rush hour, it can still be a little bit stressful. And so I was letting the FSD beta do it. And it's done it before, sometimes very smoothly, sometimes a little nerve wracking. But this time, it just like, I don't know if it was trying to overfit, like the median, stoppage, which is not really an option at this particular median to stop at, like in Chuck Cook's turn or what, but it made the left. I mean, it started going straight when the coast was clear coming from the left, but there's clearly a car coming from the right. And it tried to just like slowly like scoot out in front of it to the point where the car had to like really slow down to let me in. And it was just uncomfortable, like I kind of took it over and just sped up because I didn't want the guy to have to like slow down a whole bunch and think I'm being a jerk or something. And, I said to Matt yesterday when we were touching base, I was like, yeah, I kind of get what you're saying. Like, maybe you're not like super cautious, like I was saying last week's live stream. Maybe they're just like these uncomfortable moments that even people who are, like, making a left turn. Like I was telling Matt, like, I think maybe in the simulation data, like you would think that in all like so much simulated tests they do for this, within the simulation environment, for the full self-driving neural network, you would think that it would figure out to make a left turn that doesn't, maybe it's just figuring out left turns that don't cause an accident. And so even though that left turn 99.9999% of the time is not going to cause an accident, about 90% of the time or 95% of the time, it's going to cause an uncomfortable situation where the car that's going down the road from the right has to slow is I'm forcing them to slow down basically,
Right.
and in a way that I wouldn't if I was a human driver. So maybe they need to do something with the simulated, because it seems like something that should be trained in the simulated environment very easily, but maybe they need to adjust the logic of that or something to where like only make the left turn if you're not forcing the other cars to slow down, even though forcing them to slow down won't cause an accident either or something. I don't know. That's just like one idea I thought of. It just seems odd that it's still doing something like that. What do you think, Matt?
Yeah, I mean, this is something we kind of touched on a little bit last week, and it was funny because at that point, like, a lot of what people had seen to that point was like the drastic improvement in the Chuck Cook left, and it's like, wow, that's legitimately impressive. But a
Yeah.
lot of what I've been hearing since it's gone a little bit wider is kind of what I was saying last week, where like things are generally smoother on most turns, but the mistakes that it is making are kind of like more very uncomfortable mistakes to put it
Yeah.
mildly.
Yeah.
So like my card, for example, never used to before this, .69 update, like start the left turn if it wasn't really clear both ways, and it's doing that all the time now. And
Mhm.
so something with the logic does seem like it's off, because every once in a while you've got a Chuck Cook style left turn where like you need to kind of make an aggressive turn into a median. Like sure, like they've solved that very well, I think. But in
Yeah.
99% of left turns, just wait till both sides are clear and go. And it seems like it's not doing that in way too many of the turns. So
Yeah.
yeah, it was funny in the comments last week. There were all these people like, "Oh yeah, Matt looks like a conservative driver." So
Yeah.
it's kind of
Yeah.
kind of funny. You're seeing the same sort of things, and
I
this is
am.
I would say my experience has been like generally worse than yours in general, but it seems like this was a generally a step back for you. Is that right?
Yeah, I mean, just during the rush hour and then driving back from their school, it was still rush hour and there was like a four-way stop sign intersection that's a little complicated. But in the past, the previous version knew how to take turns and wait its turn. But then there was like, it didn't wait its turn and it just like tried to zip out right in front of like some other guy it was his turn. It was like cutting him off where if he didn't slow down, he would have hit me, like, and I had to stop it. And so I think they would have slowed down, like it wouldn't have caused an accident, but it would have just been like a real kind of a-hole move. And I see an interesting comment from Doge Nation on the YouTube live stream. We got lots of comments on the live stream. We'll answer some of your questions soon. But Doge Nation on live stream, one of my favorite guys here, says autonomous cars driving in the world with mainly human drivers will be very different than in the world with all autonomous cars. And when I read that, that just clicked a light bulb in me that all the simulation testing they do, which is like so much, my understanding is there's a ton of simulated, self-driving data that I'm kind of wondering why it's not being fixed from that. It's because probably because in the simulated environment, it's all autonomous cars, basically. Like you have a program controlling the cars. It's not humans making human mistakes texting necessarily, like while they're driving. So, yeah, I mean, in the simulated environment, all the cars would slow down and let you in. But in the real world, you never know when someone's texting when they're driving or turning back to talk to their kids and they're still driving. They don't think you're going to kind of make them slow down. They hit you. So that it's just kind of matching those worlds together is a little more difficult. But let me just be clear, I'm still very impressed with the technology. I mean, this is a beta version, and that was rush hour. That was one of the most intense rush hour traffics I've had to drive in FSD Beta, and for some reason there were so many cars on the road at that time yesterday. And the rest of the drive, it performed very well. And then the rest of the day I did several drives with it that wasn't as crazy traffic wise, and it performed pretty well like the last version, I would say, and just as good, maybe slightly better in certain marginal cases. So I'm still very impressed. And behind the scenes, they're probably making all kinds of like code changes that are going to make it easier to go to single stack so they can make faster improvements and iterations. So I think there's a lot to be hopeful for or positive about. We're just pointing out a couple of interesting flaws that we've noticed, I guess, right, Matt?
Yeah, yeah, for sure. And I mean, this is like one of the things I've noticed over time is like I'll have like issues that just persist for months and months and months, and then I get an update, and it's like, oh, that's like that issue which caused me so many headaches is just gone overnight with one
Yeah.
software update. So,
Yeah.
hopefully, this is one of those types of issues, but I'm not sure.
Yeah.
But I
There's
do
been
think,
so many little issues that have been solved that we forget about it probably. It's like when you have a
yeah,
toothache or you have like a sore and you're like, "Oh, I'm gonna have to go to the doctor for this or something." And then like 3 days later, it's not bothering you. Totally forget that it ever happened. I feel like
yeah.
there's a lot of weird nuanced errors with full self-driving that you're like, "Oh, is this gonna be fixed? Is this gonna be fixed?" And then suddenly it's gone. We forgot that it was even ever an issue. But go on, sorry.
Yeah, yeah, for sure. No, I mean that's pretty much what I was gonna say. Is just like thinking back to like October of last year was when I first got it, and at that point I was just convinced there was like major hardware problems because it was going so slow through intersections. I was like, oh my gosh, you can't see like just right over there, like it's clear, like go. And now I'm like, oh, that was actually a software issue, not a hardware issue. I didn't realize that.
Yeah,
And in fact, it was just being overly cautious. And so
yeah,
I think
yeah,
now we're in this scenario where it's being a little bit more aggressive. And in some situations, it's just being too aggressive than it should be. So they've got to dial
yeah,
that back a little bit. But my real hope from here, and I think this will happen, but I'm curious to kind of experience it, is that the rate of improvement will accelerate now that we've got this kind of big new software stack that they've introduced.
yeah.
Obviously, we're not single stack yet, but I think this is a huge kind of change to the software infrastructure that I think they'll be able to iterate on more quickly going forward.
Yeah. Yeah. And I want to also say one more positive thing about FSD beta is that the actual safety of it is very high, in my opinion. I mean, just by the number of 100,000 beta testers using this, right? And we haven't even seen anecdotal cases of like terrible accidents. You'd think by now you'd see at least a couple of anecdotal cases of like, you know, a terrible accident caused because the FSD beta tester wasn't totally prepared to take over at the right time or something like that. So it just seems like the data of the 100,000 FSD beta testers. Imagine how many bad apples there are in the FS in 100,000. Not only
Yeah,
like
for
some of our
sure.
favorite Tesla Q YouTuber people, or not YouTuber, but but people trying to make it crash or whatever. Like you'd think you'd hear of 100,000 is a huge number. We can't even comprehend. And there's probably an incomprehensible number of bad apples in that group. And it's
Yeah.
still not causing problems with the safety. So I mean, there's a big difference. It's like there's safety and there's uncomfortability. And I feel like the discomfort, uncomfortability, they got to work on that a lot. But the
Hmm.
safety seems to be almost entirely solved, in my opinion, from a statistical point of view. And it's just the discomfort of like seeing this thing maneuver in ways that make us uncomfortable because we're like almost cutting off someone else or doing things
Yeah.
we wouldn't necessarily do. That's the thing that they're focusing on that'll make it get to wide adoption. and
Yeah.
and so the safety seems clear in my head that it's like it's good, it's great. And it's just the discomfort is the separate bucket to focus on now.
I completely agree, and that's a really important point for us all to keep in mind. If you believe Dan O'Dowd, I mean, you'd imagine that we're all running over kids every other day, just based on
Yeah,
this. He's like, "Oh, it's a danger to society." I'm like, the
yeah,
statistics don't support that point of view, and that's the
yeah,
thing. I really hope the regulators and NHTSA's investigating autopilot right
yeah,
now, and I really just hope the data
yeah.
wins out in the end.
Yeah. And Andrew Bazio, who's a friend of ours, gives a good comment here on YouTube Live. Counterpoint, and I like to have counterpoints. Obviously, we like to hear other sides of stories. And he says, of the 100,000 FSD beta testers, how many are using FSD frequently? Right? Many tend to avoid using it in riskier situations. That's all true. But even best case, 10,000. Let's say 1 in 10 people are using it somewhat regularly and testing it to the limit. That's still an incomprehensible number. 10,000 people doing that kind of on the regular. And there's going to be a number of bad apples in there. So, just that extra zero of 100,000 to me feels like I'm confident that this thing is really safe, and it just causes discomfort right now. And like a lot of disengagements, I watch a lot of YouTube. I watched Farzaz the other day. I've watched Chuck Cook. I watched a lot of people and a lot of YouTubers, and even me. I disengage it, when I'm uncomfortable, not because
Hmm.
an accident is imminent, because we don't know if the accident's going to happen. Like the car, if you just let it do its thing, I bet 99.99% of the time, it's not going to be an
Yeah.
accident. It's just going to like make us go, whoa. And it's going to like stop at the last second or something. And we're just to be like,
Yeah.
well, that was a close one. I don't want to do that again.
Yeah, or you
So
get honked at, or like you
yeah, you
just
get
like you don't want
honked
to be a
at.
jerk on the road. Like that, a lot of times,
Yeah.
I'm like, I know what it's going to do here, and I don't want that person to like get freaked out, so I'm going to just take over.
Yeah,
There's a lot of
exactly.
that.
You don't want to disrupt the status quo of the traffic going on, really. You don't want to be
Yeah,
that person that everyone's looking at like, "What's that idiot doing?" Like or whatever. So it's just that's where we're at right now, is getting over that discomfort, to make it drive more like a human. I guess that's what they've been saying. So that's true. But from a safety perspective, I think it's probably it seems statistically to be extremely safe just from a bird's eye view, of
yeah,
the numbers. We look at the number of zeros of people using it. So uh
yeah.
um All right, so let's move on. The big feature of today, I think, is we're going to go over an earnings preview for Q3. We've got it. Matt and I talked about it last week. We've been kind of preparing to some degree, and he's really done a great job preparing this model, even more so from Good Soil Investments behalf. And so, if you're not on the YouTube live stream, you won't be able to see it. If you're on Twitter Spaces, you won't be able to see it, but we're going to talk you through it. Maybe we'll get some screenshots to add to the Twitter thread later. Or you can watch the YouTube recorded thing later to see the screen, but we'll talk everyone through it here. So Matt's got a screen up, and Matt, you want to kind of talk us through what's going on here?
Yeah, sure. So I'll start with maybe an overview. We've done on our channel many kind of model walkthroughs this time around. There's been kind of increased commentary in the community that like there's potentially going to be a big beat, and so I wanted to do maybe a bit more of a detailed build up by plant this time around. So came up with this model, which essentially takes the four different plants and the destination of where the vehicles are going, and tries to kind of hone in on ASP and cost of goods sold between the different regions. Because I think it was more simple to do this in the past when you just said, okay, like China and Model Y are going to be a bigger percent of the delivery, so the gross margin is going to increase. But with all the complexity of just how significantly the delivery kind of landscape is shifting, I thought it made sense to do a bit of a deeper dive. So we'll kind of walk through the assumptions of where we are right now, and kind of what that implies for potential earnings in Q3. So this is the kind of format you can see, splitting between the four plants, like I said, all the different models, and then where they are destined to go. And the reason that I think it's important to have the delivery centers instead of only, where the plants are made is that Martin Vieca's comment a couple months ago was that the highest margin car was the Model Y made in Shanghai but shipped to Europe. So presumably the margin is a lot better on that than like the same Model Y, but a lower trim sold in China. So
Yeah.
trying to get those splits right, I think is pretty important. So we've got the historical deliveries here for Q1 and Q2. Obviously, there's a bit of estimation because Tesla doesn't, shared this level of detail, but I think it's probably directionally accurate.
So
So then
310,000 for Q1 and Q2. Just to remind everyone, 254,000. Right. So yeah, let's
Yep.
just, and then Q3. What are we estimating? Or I guess you go into it. Sorry.
So yeah, no, that's a good reminder. So 369,000 is kind of the estimate for Q3. So I think it's on the higher side compared to where Troy Tesla is right now, but maybe not. Like I think there's plenty of room for Tesla to beat this figure, honestly. I think 380 is certainly within the realm of possibility. So, but I don't want to bake in all the upsides of the model. That's one of the things that we try to do very accurately here at Good Soil is not just go with the ultra bull case. So I've got Q4 in here as well, but I think for purposes of today's conversation, it's really most important to kind of hone in on Q3 and kind of what are the reasons for some of the changes that we're talking about. So just walking through a little bit more of the model. So in order to get the cost of goods sold for this quarter, I excluded the leases. So you can kind of just ignore that, but it's basically just getting rid of those vehicles that are on lease margin instead of the cost of goods sold, because the cost of goods sold in Q3 is going to be different than like the total lease gross margin that carries forward from all the previous quarters. So just that little bit of difference is in here with the way that I've built it up. So ASP, this is a pretty important because there have been so many price increases, but the backlog has been so significant that it's taken a while, I think, for some of the ASPs to make their way through the system. So for those listening in audio only, again, it's just ASP like by facility, by destination, and by model. So I won't walk through every single number in here, obviously, but I think that the big thing to take away is what are the jumps, quarter to quarter. So I've back tested these data so that like the ASP times the deliveries equals the total automotive revenue that's non-lease. So we know like the total number is right, but some of the way the pie is split between the different models or plants might be a little bit different here. But so the big kind of jump in Q2 was around $3,400 price increase on average. And then the question for Q3 is what amount of price increase will make its way through in Q3? So here I'm assuming another $3,000 kind of price increase that makes its way through. We'll see
From Q2.
From Q2. Yep. That's a fair point. So we'll leave it at that just for now, so we can kind of keep moving through here. I think the really interesting thing is cost of goods sold. So moving down to that now, you can see like I'm estimating the Model 3 out of Fremont, for example, costs around $39,000. The Model Y, we know from some of the disclosures, they say is actually cheaper to make than the Model 3, even though it's bigger, presumably because of the Giga casting and some of those technologies. So I'm assuming, $700 to $900 roughly of cost savings in Fremont on the Model Y relative to the Model 3. So obviously a lot bigger gross margins there. Similarly, in Shanghai, you got like almost $1,000 cost benefit on Model Y. The big change in Q2, jumping down to that, was all the downtime that Shanghai had. So you have to amortize more of the fixed costs, and you just get less economies of scale and that sort of thing. So I think the huge kind of gross margin hit that we saw in Q2, and I'm going to jump down here for those watching, so you can kind of see these numbers in a little bit more granularity. So you had higher. This is a gross margin kind of chart for those listening. So like I'm showing 33% gross margin for Model 3 going to Europe, and 43 in Q1, and I have that dropping to 30 and 40 in Q2, just because of those kind of factors. But then if you go back up to cost of goods sold, what I think is a pretty interesting comparison is looking at what is the Shanghai cost of goods sold in Q1 relative to Q3. In my mind, that's a really important distinction. So I'll zoom out a little bit so we can hopefully try to get these both on the same screen. Let me know if that's too small.
Nope. Looks good.
So I'm essentially assuming that there's a modest price or a cost of goods sold increase out of Shanghai from Q1 to Q3. So Model 3, for example, from 35.5 to 35.8. And the Model Y 34.2 to 34.5. So that's the big question in my mind, is to what extent will the inflation that we've seen drive up the cost of goods sold, and to what extent will the pretty big increases in output from that facility offset those increases?
And manufacturing efficiencies they improve upon offset it. Yeah.
Yeah, exactly. And I think that's the bigger thing. And inflation in China, I was looking this up yesterday, has not been, nearly as high as in the United States and Europe. So I think it could be the case that the cost of goods sold is actually lower in Q3 relative to Q1. So that's, I think, something pretty interesting to keep an eye on. Like I could be wrong here.
So just to clarify, in the chart in Fremont, you're saying the cost of a Model Y is like 40 or 41,000, right? To cost of goods sold. But in Shanghai, this is just where our estimates of our model here. That the estimate is the Model Y costs 34,000, and for Europe, or 30,000, even as low as 30 or 31,000 for China to be made for China delivered Model Ys, lower trim Model Ys made in China and delivered in China. So that's a stark difference. The cost of good, that's a $10,000 or $11,000 difference right there between China Model Y produced and Fremont Model Y produced. That's 25% lower. Yeah, that's a big difference.
And I do think, like you said, like the trim makes a big difference there. So, there's presumably a lot more performance, Model Ys coming out of Fremont than in the China market for China. So that's why you see the difference between the Europe figure, which is 34,500, and the China local figure, which is a cost of 30,660.
And this is just the beginning of us trying to split out the factories. It's going to be super interesting to see this data develop, that we estimate as Berlin and Austin ramp up. Right now, we're putting in like $50,000 as placeholders and stuff. We don't have a lot of data. They're not producing in volume, but as they do produce in volume, it'll be super interesting for us to put our estimates in for those factories as well. Yeah, sorry, Matt.
Yeah, no, that's helpful information. So, and one of the interesting things that came out just this morning, Martin said that the cost of goods sold in recent quarters has been 37,000. That actually ties out almost exactly to what I had in here on Q1.
Yeah.
So we know that this is a good anchor. We know Q2 was an anomaly because of Shanghai. So then the question is, okay, well, what's going to happen in Q3 then? And I think it's most reasonable to presume that Shanghai will be very similar to Q1 because you've got, like we said, some inflation being offset by higher deliveries and kind of increased efficiency out of that factory, and that you're going to see a little bit of cost increase quarter over quarter in Fremont. And then a little, I mean, Berlin and Austin hardly even matter because the deliveries are so small, but I'm assuming that those go from, like really terrible gross margins to like not quite so terrible, but still not 25% kind of range.
Yeah.
But the interesting thing is when you put all this together, I'm calculating the gross margin excluding credit. So this is inclusive of full self-driving and everything like that. That runs through ASP, but excluding just the credits. And so what we have here is that in Q1 that figure was 30%. In Q2 that dropped to 26.2%. So a huge drop. But in Q3, if these numbers are right, then that gets to a gross margin of 34.7%. So a really, really
Wow.
huge jump quarter over quarter. And this
Yeah.
is something that Wall Street is definitely not expecting. Some bulls have been saying like, 40%, 50%, something like that. To me, that seems like a stretch, especially in light of Martin's comments. But this to me seems pretty reasonable. And essentially what you've got is costs staying relatively flat. Actually, I have them increasing a little bit relative to Q1 if you do kind of like the weighted average.
Mm-hmm.
But the ASP increase is more than offsetting that. So you've got a huge increase in margin, really, because you got costs like increasing slightly, but ASP increasing quite a bit. And so then when you run this through, I won't use the full. We've already gone on quite a bit on this model, so I won't go through the whole detail in the model like we usually do. But when you add in that figure into our kind of existing model that we always run through, you add just 350,000 or 350 million of credit sales, then you get an automotive gross margin.
And just so people know, 350 million credit sales, we're just assuming that as a placeholder because that's what it was last quarter in Q2. So we have no idea. We're just going to say it's the same as it was last quarter anyway.
Yeah, exactly. So then you get a total automotive gross margin of 35.7%. I do think there's reason to believe that energy and services are going to have, pretty strong margins as well, but those are, frankly, rounding error in the grand scheme of things. But those will start to contribute as well. And so then you'll have total gross margin of 32.7%. And then let's just jump down to, in the interest of time, to earnings per share of $1.68. And for those watching on YouTube, I have Q2 on here as well, and that was 218, but I didn't adjust that for the split. So it's like you like
times it by 3. Times $1.68 by 3, right?
The 168 multiplied by 3. Yeah. So it's a huge increase quarter over quarter. And so that'd be equivalent to $5 per share. Yeah.
Wow. So it's going from 2018 to $5 per share in one quarter. That's the equivalent if there was never a split, for example. So that's incredible. Yeah.
And last I saw, Wall Street was at like $1.06 or something like that. I think Gary Black is at like $1.12. I think James Stevenson is slightly conservative. He might be around $1.20. I don't remember his latest.
So Wall Street is at like pre-split at like $3.30 a share. When it was at 2018 cents Q2, when like Shanghai was shut down for the majority of the quarter, and like that's the profit making. Everyone should know that that's like the major profit engine of Tesla for right now. And they still did 218, and now Wall Street is saying, okay, yeah, Shanghai's up and running the whole time, and everything's up and running, but we're only going to give you a little bit of credit. So now it's 310 or 330 or whatever a share. That just seems, I guess that's too modest. I mean, it just seems like the $5 is certainly in the realm of possibility or almost probability in our mind. This is our model estimate. This is our best estimate. This is where we think like the 50-50 over underline sort of is this $5 a share, so to speak, right? This is sort of like our estimate that we think is like 50-50, either over or under. We try to figure out what we think it is for that in terms of delivery. All the assumptions, the main assumptions of the model are the delivery numbers, the cost of goods, and what are the other assumptions I'm missing here that we have to assume?
The ASP increase is a pretty big one. We assume that's 3,000. That it's very possible that's too high.
It's possible. Yep.
But so like we've done some sensitivities. Emmet, you and I were playing around with this model last week, and it's like when we're kind of going on an uber bull case where we assume everything's about as good as possible, I think we're coming up with like $1.79 or something like that. And when we kind of bring things down to a more measured, ASP increases and more significant cost of goods sold increases, we're still coming up with like $1.55, somewhere in that range, I believe.
$1.50 or $1.54.
Yeah.
If I'm
So
looking at it, yeah.
yeah, so it's either way, it's a huge beat. So either like I'm totally out of left field, and this is just wrong,
Yeah.
which is possible, but to me it seems very logical.
Yeah.
Or
The
we're
smaller
in for a big beat.
assumptions are like the regulatory credits or like the take rate change in FSD. That's a more important
Mhm.
assumption, obviously, but it's less
Which
important than the price increase for assumption, for example, right?
Right, yeah, and those, like, just to be clear, I do have assumptions around those, but I didn't really change those, and in fact, with the way that we built up the model this time around, we've actually bypassed all those assumptions. So we're assuming that it's baked into the ASP, all the FSD sales and that sort of thing. So, if take rate actually does increase, that would be just an increase in ASP beyond what we've assumed here. So really, we're assuming that the ASP increase is just due to timing of the price increases which they've introduced over the last 6 months or so.
Yeah. 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 All good stuff, Matt. I mean, it's really an impressive model. We'll go over the model again in more detail. Probably, after we get the delivery, the P&D numbers from Tesla in the first or second week of October on our Tuesday live stream, we'll go over it in more detail of what our a more official earnings per share, fine tuning prediction is. But right now, $1.68. Heard it from us first. That's our prediction at the moment. And yeah, it's exciting.
Yeah, and Larry Goldberg, who's I see him in the audience. He posted a model recently too. He came up at $1.48, and like that was like, I think, surprised a lot of people that he was going so bullish. But I think as we've been thinking through the detailed buildup, I mean, I think there's just reason to think that we are kind of at this inflection point where there's a step change in profitability. But it really takes digging into the details, on a plant by plant basis, I think, to really understand why that's the case.
Yeah, absolutely. Cool. So, and Brian Wang, another friend of ours from Next Big Future, says, any real data about enhanced autopilot sales? We did touch on that a little bit, but we don't think the take rate is nearly as high as other people some of the bulls are suggesting. So
Yeah.
I think we have a modest take rate on that. But you could also say some of that cannibalizes the FSD, the full FSD, beta take rate to some degree too.
I think it
So
will.
it's not going to move the needle net as much as people think. Yeah, in our opinion.
Yep. Yeah. So, my assumption in here, which again gets washed out with the way that we did this up, because I'm changing the way that the model has historically worked. But my running assumption was a 5% take rate, and then 1% of existing like users would upgrade.
Yeah.
But then I brought the FSD take rate down about 3% to kind of account for that. So the overall take rate on EAP plus FSD would be increasing, but by a pretty modest amount. And again, that's not really driving the figures here.
Yeah. Yeah. Cool. So, what we normally do is we do Q&A from people who tweeted questions to the Twitter thread for Good Soil Invest about this live stream, and also from people in the YouTube comments. So we'll do Q&A the normal conventional way for another 20 minutes, and then we'll probably stop the live stream about an hour and 10 minutes in like we normally do, but we'll continue on Twitter Spaces live for the last 10 minutes and do more interactive Q&A on the Twitter Spaces, because whoever's talking on Twitter Spaces won't be recorded on our YouTube live stream anyway. So let's take Alec will queue up some questions we'll read and go over the next 20 minutes or so, and then we'll end the YouTube live stream and keep going on Twitter Spaces. So from Calistoker123 on Twitter, Matt, any new insights from becoming a Lemonade customer? Yeah, Lemonade is another stock that we talk about from time to time that we were convicted on. InsurTech play. It's got like a 1 billion market cap. It's a very different animal than Tesla, who's a 1,000 times bigger market cap, obviously. So anyway, Matt, any insights from becoming a customer of Lemonade?
No, I mean, nothing new anyways. I mean, I think the big thing I spoke about when I did become a customer for the first time was just like what a relief it was to not have to deal with like the normal pain points of dealing with an insurance agent. So like the most surprising thing was just that they canceled my old policy for me. I mean, that was just a kind of huge relief. The one thing that has surprised me, I will say, and I don't know if we've touched on this on the live stream, is that I've had 9 people use my referral code. That I
Wow.
just like, yeah, like I used to tweet my like Tesla referral code all the time. I've never had a Tesla referral, um, but like I just said kind of my experience on getting my home insurance through Lemonade, and how it was kind of surprisingly easy to sign up. And 9 people signed up, which I was really surprised by. So, I mean, my insights are kind of the same as that they've always been, which is like I think the play here is, that the enforced premium per customer goes up, the customer count goes up, and then like you've got this kind of runaway increase in the top line, and linear increase in OpEx to kind of keep up with that. And that's where you get, really drastic operating margins going forward. But I'm guessing most of the people on the YouTube or on the Twitter space probably want to hear a little bit more about Tesla. So maybe the next question we can talk about that.
All right. From Tesla Economics, again, one of our favorite handles here. Great name you picked out. I love it. It's going to be in the Webster Dictionary one day, I think. So question, what do you guys expect to see in AI Day? Also, do you think 100,000 deliveries from Giga Shanghai will be achievable this month? The AI Day, we're definitely going to see the Tesla bot. I don't know what it's going to do, or it's going to interact with people, or Elon directly. Maybe I'm excited to see this thing, and yeah, I don't know there's going to be some cool stuff. Maybe, I don't know, something cool. I don't know if it's going to be like a new. I don't think there'll be new product announcements or like a new Gigafactory announcement. I think they'll reserve that for other things. But I think this is going to be all about the bot and kind of a recruitment tool for AI, real world AI people that want to do cool things. And then the second part is, do you think 100,000 deliveries from Giga Shanghai is achievable? I think it's possible. My over under is really going to be like 90,000 for this month, which is still pretty great. I think if they did 100,000 this month, to me that would be like really bullish for Q4. Like 500,000 deliveries is not out of the question in Q4 then. So that would be incredible. Exiting the year 2 million a year run rate, as the steeper part of the Giga Berlin and Giga Austin ramp ups aren't even met yet. I think the steeper part of the ramp up of production for Berlin and Austin are next year. I think it's still kind of ramping up slowly the rest of this year. So it's exciting. Matt, what do you want to say on the 2 questions? Do you have any thoughts on that AI Day and 100,000 deliveries?
Yeah, I mean, AI Day. I'm not really expecting anything, kind of groundbreaking. I think we'll see some version of Optimus. I kind of don't think it's going to be like knock your socks off, like it, can do something truly extraordinary. I think it'll do something that's like pretty cool and gives you confidence that like they've made significant progress in the last year. But they've not been working on this for very long, so I don't really have my hopes up too high on that. And regarding and I do think.
Do you think they'll take orders? Do you think they'll start taking orders or deposits?
I don't think so.
Yeah.
I don't think they're that far along yet. But who knows? They've been taking Roadster orders for like 7 years now or something like that. So maybe
I'm one of
I don't
them.
know.
Yeah, I'm waiting. Yep. Anyway, go on.
You'll get yours. Hey, it's a nice inflation hedge.
Yeah.
But so like I think AI Day is primarily going to be about recruitment. I mean, it seems like that's way more what they care about than like hyping up the bot. So I think it's going to be super technical. I think my brain's going to hurt by the end of it. And that's really like, I'm not really expecting any like stock price rally or anything like that. It's probably going to be good fuel for like long-term bulls like we are, but I don't think it's necessarily going to be like a huge surprise. I do have this thought that maybe they might introduce like the thing that they've been working on in Shanghai, like the Shanghai design studio that they were talking about. I mean, that's been going for a while now. Maybe they've actually got something they can share on that front. So, or maybe it's even just a teaser. Hopefully there's something cool like that. And then on the 100,000 deliveries, I'm with you actually. I was kind of surprised you said 90,000 because that was the number I had in my head. Like 100,000 that's just a huge. That's a lot of deliveries in just 1 month for the Chinese market. So hopefully they can do it, but I wouldn't be disappointed if they've got like 90.
And 100,000, I was referencing 100,000 production. Deliveries and production are usually pretty close anyway. The last month of the quarter, give or take 5,000, let's say at the most. But yeah, anywhere from 95 to 105,000 in that range, it seems like almost very hard to achieve. But if they did, it would be really a great sign.
Yep.
Next question here from Dave Wolf on the YouTube live comments. Question: with FSD Beta going to a larger audience, how much, if at all, do you think it will increase the take rate? I think if he waits until, the discomfort level is much more tolerable, then I think that's the time to have it go to the larger audience. And I think maybe that's what he's waiting for. Like, you have the safety aspect, which seems to be solved based statistically on the number of beta testers. And then you have the discomfort level, like how to drive more human, or maybe another way to say it is how to not drive like a jerk. Driving like a jerk doesn't mean unsafe. Like, stopping all the way at a stop sign and very slowly rolling forward is sort of like driving like a jerk or an old person that gets people upset, but it's not unsafe, like,
Yeah.
or waiting super long to make a right turn that's fully clear when the car behind you is like, come on, go already. That's not unsafe. It's just sort of like driving like a jerk or not like a human. So once they get past, I think, those discomforts where it's like more like a human and less like a jerk or less like someone that's going to annoy other people, then I think they go to wide release. And then it's highly likely that people will refer it to their friends and be like, oh, this is great, you should try it or whatever. And the take rate could go up quite quickly at that point. Any
Yeah, I completely agree. Like, I think it's at this point now where if you're an early adopter or somebody who's kind of interested in tech, it's awesome. Like, I really love
Yeah.
just like watching it, like, improve over time and just seeing like what it's good at and what it's not. Like, I find that fascinating. But
Yeah.
my wife hates it because it's so uncomfortable. Because every once in a while it'll just like jerk or do something, and she's like, "Oh, could you just drive, please?" It's like so
Yeah.
annoying.
Same with my
So
wife. Yeah.
I think my test will be like when my wife doesn't complain that I have FSD on, then I think take rate's gonna really increase, because then you'll be moving from people who are just interested in the tech to people who are like, wow, this is an amazing kind of convenience
Very
and
practical.
comfort feature. Yeah. But I think EAP, I do think it's important to note, like enhanced autopilot, I think that take rate is really going to, drive meaningful increases over time, because it's like navigate on autopilot for people who do road trips. Like that already is like at the
That's
huge
super comfortable.
convenience, comfortable, like
Yeah.
really relieves a lot of stress on your mind kind of behavior.
Yeah.
So that one, I think that's there already. I don't know how long
Yeah.
FSD is.
Navigate on autopilot, you could set and forget it. You just set your
Yeah.
destination. If you're, as long as you're on the highway, you could just like daydream, but watch the highway and hold the wheel, but watch the highway. And you just, you'll automatically, take over when if there's some really crazy circumstance, but you can really, for all intents and purposes, just kind of like daydream while you're watching the road while it's doing its thing. Yeah.
Yep.
Next question from Mark Patty on Twitter. How big of a risk do you think regulators and bureaucracy pose to the adoption of robotaxis after FSD is solved? I think, I was thinking about this. I think about a lot, regulators in the US and, O'Dowd and the other senators who are trying to make a big stink about this or whatever. And I think that there's a chance that even with this self-driving FSD beta, like worst case I see is FSD beta causes some accidents or some crazy instances blown up into national media of it hitting a child or something, and Dan O'Dowd was right, we need to do something about this, like is like there's marches or whatever. It just, senators play on that type of emotional outcry of like the video being shown all over, even though statistically it's 10 times safer or whatever. And then I think there's a chance that it plays out where like some like law is passed federally that you have to get some special license to drive it on FSD beta. And it's going to be such a hassle and paperwork process that like hardly anyone's going to want to do it. And it's going to like slow down everything drastically. And that would suck. I hope that doesn't happen. I hope there's no federal like legislation event, that happens like that. That's my worst case fear. But if that doesn't happen, I don't see it being stopped. I think one state or another state will adopt it quicker than others, one city or another city first, then the state. And and even if it happens in the US where you have the federal legislation, then it just sets it back maybe a year or something for it to go, wide scale adoption in China first before the US, or it gets fitted for China and your country, Norway, or somewhere else that's friendly to new technology. So I still think it happens. It just delays, worst case. Matt, you have any thoughts?
Yeah, I would say I'm slightly concerned about the NHTSA investigation right now into autopilot. So
Hmm.
they've been investigating these frankly really old crashes by now of like autopilot crashing into vehicles parked on the shoulder, I think it was, or it just stopped in the middle of the highway. And just in June, I think it was upgraded to an engineering analysis, I think, which is kind of like the last stop on their investigation before it can lead to a recall, essentially. So technically, like NHTSA could recall autopilot. And if that were to happen, like I just don't have the confidence necessarily that they wouldn't go down this route. I mean, especially with the appointment of Missy Cummings and just like how blatantly political that seemed, or at least like she's got very strong misconceptions or bias against Tesla and autopilot. So I do hope that like the data will win out in that NHTSA investigation, and I think ultimately it will. But that does have me slightly concerned, because I think if there was some sort of recall from NHTSA, that could potentially be bad news that I think a lot of bulls are not necessarily thinking is a possibility.
Yeah. Yeah. Next question from Joel Schroeder in the YouTube live comments. Question: has the Tesla community changed their view of Biden after the Inflation Reduction Act, since it was so good for Tesla? He was getting a lot of heat for a while from the community. I don't know. I mean, politics is kind of dangerous waters to wade into on these types of discussions. It's just a dirty business, politics. I guess I'll just leave it at that. I don't know if the Tesla community. I don't want to speak for the Tesla community on this. I think the Inflation Reduction Act itself was not necessary for Tesla to succeed, and there's a lot of pork in it, and yeah, I mean, it'll help the competitors of Tesla a great deal. Try to become profitable or not go bankrupt selling EVs, I guess. So maybe that's good for all of EV adoption, I guess. Matt, you have any thoughts?
Yeah, Farzad says he has not changed his view of Biden in the So I'll say this: like I think a lot of times we ascribe stuff to Biden that is the administration writ large. The kind of pure bias against Tesla certainly evoked strong reactions from the community. I think of in a negative way. But I'll
Yeah.
just say from my own experience, and I'm completely on board with those criticisms for what it's worth. Two things I'd say. One, this Inflation Reduction Act I think is definitely a good thing, not only for Tesla, but I think it's on the whole good for the country. I think reasonable people could disagree with that, but I think it's at least a reasonable thing. And I do think the administration's stance. I'm not sure I want to ascribe all this to Biden or not, but I think the way that they've handled the Ukraine situation has been pretty impressive so far. I mean, the
Yeah.
way that they called out before the invasion even happened that there was all this Russian disinformation and kind of calling out what Russia was going to do, and then kind of supporting the Ukrainians without getting into an outright arms fight. I do think that that's something that the administration has done well. So I'll leave it at that as well.
Yeah. From Brian Wang: if Tesla officially announces new factories in Q4, like Canada, and perhaps some more, what would it take for it to be a share price mover? Yeah, I mean, at this point, Tesla is so big, $1 trillion market cap. Like, for it to suddenly get revalued at like a 1.5 or $2 trillion market, for it to be meaningful where it moves the share price, where people start buying it like at a 1 trillion market cap because they think it's a great deal now because of this news event. I just don't know if any one event like that is going to have such an effect. I could see like a 2% move in a day from something like that, maybe. But I think it's a culmination of things, and it has a lot to do with the earnings per share. That's probably the biggest driver, and the forecasts of PE, forward PE of Tesla, and the fundamentals improving. But events like a new factory or launching insurance in new states or 2 new factories or, getting into lithium mining, these are all helpful. I think they help move the tide for Tesla in the right direction. But I don't think any single announcement or stuff like that for Tesla at this point, being a $1 trillion market cap now, is going to move it substantially by itself. Do you have any thoughts on that?
Yeah, I mean, it might even be bad news potentially. Like one of the most common, bear critiques of Tesla is that they're overbuilding Model Y capacity in particular right now. So, people are saying, "Oh, why are you building capacity for like 2 million Model Ys a year? That's crazy. Like, you're
Yeah.
gonna overbuild and you're gonna end up with all this stranded capacity," which is like how auto companies go bankrupt historically, is having too much capacity. So I don't think the market would at all say like, oh, good, like there's more credibility to the 20 million by 2030 target, so let's increase the valuation. I think the markets are not looking at this the same way that most people in this audience are looking at the importance of a new factory.
Yeah.
So I agree with you. EPS is going to be a lot more important in the medium term, short term.
Yeah, going forward for sure. Yeah. I mean, back when it was like a 20 billion market cap or 5 billion market cap or 30 billion market cap company, I feel like you could have a big event that materially changes the valuation estimates by investors of what Tesla will become. But yeah, once you get to like such a big number as $1 trillion market cap, like Apple announcing a new factory, you gotta think like, oh, if Apple, what single announcement could Apple potentially do now that moves the price more than like 3% on a day? Like
Yeah.
there's really nothing. Even if they did announce like a car, what's that going to do? Move it up 5% maybe? I don't know. If they're like announce a car with specs that they're taking orders now, maybe it moves it up 5 or 10%. That's like the most amazing thing they could potentially do out of the spectrum of things Apple could do. But I don't think that would even ever happen. But yeah, anyway, let's go to the next question here. From Terrence on YouTube Live. Hey, Matt and Emmett, what's your fiscal year 2022 and fiscal year 2023 earnings per share estimate for Tesla? I'm wondering what the target price would be based on a 30 to 50 PE range, putting aside macro. Thanks. So we sort of touched on that a little bit in the model. We'll go over it more in the next version of the model. But I don't know, Matt, any rough back of the napkin thoughts you have on those? Thoughts you have on that?
So a couple weeks ago, I posted my estimate for 23, and I don't remember the exact figure, but it was somewhere around like 9.25, something like that, I want to say.
Mhm.
And so the rough math on that would be, it's like slightly above 100 PE right now based on the current price, forward PE. But in the last 2 weeks, I'm like given the deep dive on like the unit profitability that we just went through, and especially some of the news that's come out recently is how drastically the energy storage business is really ramping up right now. I expect like those two things to be pretty meaningful drivers of margin going forward. And so while I haven't updated my 23 forecast yet, I'll probably wait until we actually get the Q3 numbers so that there's a little bit meat on the bone of these projections before we go out to 2023. But my sense is I'll be increasing my estimate pretty substantially. And I mean, you could just, I don't think I would double my estimate, but if I did, then that'd be a PE of 50. So I think we're trading somewhere between like a 50 and 100 forward PE right now. But Wall Street's estimates are a lot lower than mine, so their implied PEs are a lot higher.
Mm-hmm. Yeah. Let's do one more question on the YouTube live stream here, and then we'll we'll end the YouTube live stream and just finish off another 15 minutes of interaction on the Twitter Spaces here before the next Twitter Spaces starts up after. So last question here on the YouTube live stream. Calistoker123 on Twitter says, what's your initial reaction to Cruise's announcement of scaling up in Austin, Texas within 90 days? Scaling up I guess there's have you heard about this announcement? I mean,
Yeah, there
announcements don't
was.
mean a lot to me right now, but yeah,
I think they're actually going to do it. So I mean, they're in San Francisco right now. I think they announced they're going to be launching
Phoenix
a
and Austin.
service. Phoenix, yeah, it was somewhere else. I couldn't remember exactly where, but yeah, there was one other city and Austin. Okay, like it's not profitable as is. At least that's my understanding, and they don't have a generalized solution that's going to work, nationwide, let alone worldwide. So, like even if it definitely is reality that other companies are launching autonomous ride-hailing services faster than Tesla. Like, that's true, but they're not doing it in a way that I think is meaningful to valuation and to like value creation in the long term. And so um, it's kind of a non-issue in my mind, unless Tesla's FSD like really stretches out another decade, and it turns out that like you can HD map the entire world in the decade that it took Tesla to go from now to like truly solving the generalized approach.
Yeah. Yeah, I mean, Cruise. It's an entirely different philosophy. The way Waymo and Cruise are approaching full self driving, level 4 versus Tesla, and yeah, I think Tesla's way is the way. I trust Elon's assessment of why it's the way, and it becomes more clear to me the longer I'm seeing it play out. That the real world data is probably much more important than anything else, and the neural network approach, versus geo fenced micro mapping approaches. So um, yeah, we'll see what happens. All right, we'll end the live stream here, and we'll keep talking on Twitter Spaces live for those who are on YouTube live that want to keep listening. But we'll be on next week on the YouTube live stream as well for Going Live with Good Soil, episode 64, same time, and we'll keep it going. Alec, if you want to